Snipers, you have to see what's happening to the Bitcoin price this Friday. As I wasn't able to get a video out on Thursday, but since Wednesday when we got back above 49,700, we have now failed to hold this extremely important level, but we are still above this 200-day moving average at 46,600. We've never seen candles get below this level since the initial dump. And because we saw candles get back above 49,700, the bulls are obviously still in the playing field. So we have a lot to look at today. It's Friday. It's actually 3 a.m. I'm about to fly out back to Los Angeles from Mexico. So I'm hoping to get a video out at the airport, but it's going to be a little bit rough for these next couple of days. At this point, 46,600, this 200-day moving average, is the most important support level that Bitcoin has maintained itself above. And with traditional markets showing strength and the S&P 500 recovering all of its losses, I don't think we have to take the bullish scenario off the table just yet. And the reason I say that is if at any point in time now we get back above 49,700, I think that's going to be the mark that the bulls really have to put. I don't think that it's a guarantee right now that Bitcoin is going to see continued downside. I think this is a good area to be dollar cost averaging positions into Bitcoin. And the way that traditional markets have recovered is a clear example of why these dips sometimes are the perfect opportunities. But if we start to get to this $46,600 level during the weekend, that's when we'd have to start being a little bit more concerned about more downside scenarios. Of course, 44,800 is the major support below that, and then 41,950 is also on the table. We did clear the order books already in this range, and so if we see decisive price action to the downside, 38,000 comes on the table. But that doesn't necessarily have to happen. At this point, Bitcoin can just form a higher low above this 200-day moving average. We get back above 49,700. If we can finally see some volume on the 6-hour chart, that's all we're going to need for us to get above that 20-week moving average, put us back inside of this bullish trend. Getting above 53,000 also puts us above this market structural resistance, which will turn into support, the checkpoint that the bulls really want to see potential price discovery continue for Bitcoin towards the end of this year, maybe early 2022. It's clear that since we got back above 49,700 with many 4-hour and 6-hour candles, that the bulls are still playing this range. And when we get above 49,700, the only next resistance is 58,300. So I'm not surprised right now that we're seeing some bears come into action. We haven't seen 6-hour institutional volume yet to justify a bottom. But remember, that could come on a break of a major resistance like 49,700, especially on a second break. It's very likely that when you come for a second time, institutions will then put in the volume. We know 44,800 potentially, or 41,950 now, could be the area we see the volume now that institutions know where the barrier is here for Bitcoin. Notice here that we did actually get institutional volume on this 15-minute chart when we first came down to 42,000. And this has happened many times in the past when Bitcoin has bottomed out. Even when we came down to the $28,000 level earlier in this year, we saw institutional volume at the bottom of that level. And so this is a huge puzzle piece. We know this is the only institutional volume that really has come in since we saw this dip. And so we really want to see more of this, but that could be the floor potentially there. As a hint here on the 15 chart, since institutions did come in at this level, we know that the bullish scenario is certainly still on the table. It's highly likely, and as long as we stay above 46,600, this 200-day moving average, that's all we need for a higher low to form and for Bitcoin to see continued upside. And why wouldn't we see that with the S&P 500 recovering all of its losses from the DXY moving up? The DXY has maintained itself at these higher prices, but the S&P 500 has also been able to recover its losses. So I don't think that the puzzle pieces outside of Bitcoin right now are necessarily too bad. The gold to Bitcoin chart is pretty much the only chart that's actually not in favor of Bitcoin seeing further upside because it's above the 20-week moving average. So this is really the biggest puzzle piece as well for the bears. But I think there's more bullish puzzle pieces on the table than bearish puzzle pieces. You can see Bitcoin has also held this 50-week moving average so far, and that's sitting right at that $46,600 level as well. It's really at $47,000 level, but it's pretty much where that 200-day moving average is sitting. And we rejected this 20-week moving average and this market structural resistance. So this is totally garden variety market behavior to see a rejection. It doesn't mean that's the end for Bitcoin. I think that because we got candles above 49,700, that's a very positive thing, because Bitcoin, when it comes down, it likes to take the elevator. It goes pretty fast. But when we start to slow down and we start to see those smaller timeframes with institutional volume, we have to start putting some upside scenarios on the table. And so that's why I think that the bullish case is still there. And then the total cryptocurrency market cap chart is continuing to sell off, now below this major level of 2.259 trillion, but we haven't seen much price action towards this 200-day moving average whatsoever. And so I wouldn't say this is actually a bad trend right now for the total market. It's going to wait on Bitcoin, of course, because Bitcoin controls the majority of this market. And then Ethereum came back above 43.73, but obviously with Bitcoin falling down, it rejected once again, but we're still seeing strength against Bitcoin. And the reason I say that is we had a full daily candle above 86,000 Satoshis. Now we're back below it. I was expecting us to slow down here because this is a major level. And so we can expect a slowdown, but it's still not weak. Ethereum is extremely strong right now, still against Bitcoin. Now, something that I think we have to watch here over the next few days into the next few weeks is Bitcoin dominance, because we are testing these previous lows. And if we do break down and we see further downside and a full decoupling away from the DXY after the DXY has been showing strength, but the Bitcoin dominance chart hasn't been following it, this is going to be something that really could change some of the dynamics in the market, especially with altcoins. So we want to watch this. That's going to be on our radar coming into next week. And then the altcoins outside of Bitcoin back above their 200-day moving average, really tightening up here, which isn't a bad thing. Consolidation is always a good thing. And so not much bearish puzzle pieces other than that gold to Bitcoin chart. We got some candles above 49,700 this week, which really was what we wanted for the bulls. Of course, we're back below 49,700, but that's totally expected with a rejection of a major market structural resistance and 20-week moving average, because we're maintaining this 200-day moving average and the 50-week moving average right now. So until we see price action below 46,600, I think we still have to keep the bullish scenario on the table. It's very plausible, but if we get below 46,600, things could change quickly. Other markets like the S&P 500 are not indicating that there should be further downside right now. And so with that, thank you all for tuning in today. Once again, I am going to be flying out. It's 3 a.m. right now on a Friday. I'm leaving at 8 a.m. and then I have to go on a flight from LA to Florida. And so I'm going to be flying for the next 24 hours. I'll try my best to get a video out at the airport, but I appreciate each and every one of you tuned in to the channel. Let's hit 100 likes on this YouTube video. And until next time, snipers.